Hi,
Hello,
I'm Desiree Dubois, founder of Homework, and you
I'm
are.
Gary Zimmerman. I'm the CFO of Homework.
Okay, so what are you up to today?
Well, I'd like to talk about syndications versus a fund.
Okay, because a lot of people ask us that all the time. What's the difference between a syndication and a fund? So, what's the difference?
Well, a syndication
Mm-hmm.
is where you pool money together from investors
Mm-hmm.
to buy, in a real estate sense, would be to buy a property. Now, there's other kinds of syndications. You
Okay.
could syndicate a TV show.
Okay.
Those are reruns.
Mm-hmm.
You can do capital venture syndications where you raise money to investing in startups. But in our case,
You do
we
it for real
do
estate.
it for real estate.
You also told me a funny story about the horse.
Oh yes, the horse secretariat, which was a Triple Crown winner, and I believe it holds the record in the Kentucky Derby. And they syndicated the horse,
Yeah.
so you can syndicate just about anything.
Yeah. We have someone that's syndicating a boat, someone syndicating a cars. So
Hmm.
it's just that's the theory and
Yeah,
that's the concept of syndication.
yeah. It's just pooling investors' money to purchase an asset.
Okay, so what's the fund?
A fund would be where you would want to do this for multiple assets
Hmm.
instead of just one.
So do
So
they all have to be real estate or can it be?
no, that can be mixed. It can be real estate. It depends on how the fund is set up. It can invest in just about any asset.
Because I know I've heard like funds where they have like commercial, industrial,
Hmm.
Bitcoin, private money lending and so
Yep.
forth. But that's the kind of little to me it's a lot of variety.
Yep.
But our funds are specifically for real estate and it's
Yes.
specifically for the hospitality industry.
Yes.
That's our asset class, which I think is really great.
And there's advantages of doing just real estate.
Okay, tell me.
And one of them is if you're doing a real estate fund, the advantage is you don't have to do individual syndications for each property, which can get expensive because every time you do it for a single syndication, you have to do all of the paperwork. You have to have
Okay.
the legal, you have to have the accounting, everything has to be done separately. When you're doing a real estate fund, then you're doing it for multiple properties or multiple assets.
Mm-hmm.
So that offers diversification for
Mm-hmm.
your investors. Plus, it makes sure that you only have to do the paperwork once. So you set up the fund and then you can acquire multiple properties. The advantage of the sponsors or the GPs, the people that are running the syndication, is that they can move quicker because they
Mm-hmm.
have capital available when they find an asset or a property, they can it's much quicker to purchase rather than finding it, then raising the funds, then doing all the paperwork and then getting it ready. So
They'll probably be able to get better deals too because they'll be able to buy cash. If they find a transaction that they can significantly save
yeah,
by buying it for cash, they can
yeah,
do that. Even if they go behind it and refinance it thereafter, they're able to purchase it with cash and
yeah.
faster.
Now, if
I love it.
you can for if you are purchasing multiple properties, you can still do single syndications for everything.
Hmm.
It's just those are the disadvantages, is you're gonna have to do each one separately and each
Hmm.
one's gonna have to be its own entity.
And then I'm sure it's more cost effective,
Hmm.
for doing the fund because again, it's a legal, there's costs. Like usually syndications are anywhere between 20 to 35, depends on your attorney.
Yep,
Whereas if you just pay the 30 or whatever it is for a fund, you're paying it once. And those savings are passed on to your investors. So less
absolutely,
expenses you have, the more profits you'd have.
absolutely.
So there's a disadvantage there. But sometimes the funds are usually a period of time is usually
Hmm.
it
Yeah,
varies.
yeah. You can set a fund up. Normal fund would be set up for possibly 5 years.
Hmm.
So then you're in the fund for 5 years. With any syndication or with the fund, the funds are not very liquid.
Hmm.
They can be redeemed at certain ways,
Hmm.
but it's cumbersome to do that. So
Hmm.
if you're going to invest in a fund or a syndication,
Hmm.
typically you're going to want to just leave the money in there.
Yeah, and they usually will tell you up front, what the
Hmm.
time period is.
Yep.
And obviously, if you're having like land development,
Hmm.
the time is longer. And then if you have something that's a short fix and flip, then that would be a shorter period
Yep.
of time. Another advantage is that it does have some tax advantages.
Hmm.
For doing either syndication or a fund,
Yep.
you'd have the ability to either use cost segregation or some.
Deduct depreciation.
Exactly. So there's some
Hmm.
cost advantages. And it's, again, usually you have fixed returns as
Hmm.
well. Usually your sponsors can determine or assess what the return on your investment is.
Yeah.
So you'll try to, it's a little bit more
So
comfortable.
is accredited investors only for funds? or for
No,
syndications?
no, you can use accredited or non-accredited. So if you have 506B, you're able to have up to 35 non-accredited investors and then as many accredited as you want. If you have a 506C, it's only for accredited investors. And so if you're wondering what the difference is, accredited investors is someone that either makes $200,000 a year or 300 as a couple, or have assets that exceed $1 million, excluding their primary residence. So I know what we're doing is that we're doing it both. We're going to start off with a 506B so we can extend the opportunity to all of our friends and family and community. And then after we've completed that, then we were going to convert it to a 506C, which will allow us to open up to the public and fulfill the fund.
Yep. Okay. So to summarize, syndication
Is and individuals to invest in a certain asset. And the thing is also too about it is that it could be any age. You know, it could be any age, anybody. You don't have to have any pre-qualifications to be able to invest into a syndication or a fund. And some people are restricted from other type of investments because of their citizenship or their age or whatever qualifications may be. Anyone can invest into a syndication or fund. You have a securities attorneys that set it up, make sure they're security attorneys, not just any attorney. And there's a lot of them out there, but it's just finding out about it. So we need to tell everybody about ours. So stay tuned.
Yep. So the difference, summing up again, the difference between a syndication and a fund is syndication is for a single asset or single property. And a fund is typically used for multiple assets or multiple properties. That's not to say you can't do, multiple properties with a syndication. You can, but there are advantages for the fund, which is
this is why we're doing it.
It's why we explained it.
Yes. So any other questions or any other ideas, or if you want to find out more about our syndications and our funds, contact
Mary Zimmerman or
contact you. No, you can contact us at Desiree at homework.com, and the information is listed below. So we look forward to seeing you soon. And if you have any other questions, contact us. Meanwhile, remember, homework is where you can live where you work where you live, anywhere in the world.
Have a great day.